Hello, this is Alex Glaser with Coldwell Banker Vaughan Realtors here in Richmond, Virginia. Thank you so much for checking in on your March 2013 real estate market update. I'd like to start off by saying that the real estate market is in a really good place right now. If we take a look at this first slide, which is a slide that shows the pending home sales, and this is the number of people that go under contract on a month-to-month basis. So looking at the chart in front of you now, if we look at the light green, which represents the homes that sold each month between January 2011 and January 2012, and then compare that to the January 2012 to January 2013, that's the dark green that you see, we can see a significant increase in terms of homes selling nationally. If you look at that dotted line going across, this is a historic healthy level. And this was determined by the National Association of Realtors. They went back before 2016, before the boom, and looked at all the data, crunched the numbers, and said that this is what a healthy market looks like in terms of home selling each month. So as you can see, we've actually been back to an historic healthy level since June. That's over 6 months straight. That's really exciting. The next slide we're going to look at briefly is the sales and activity here in Richmond back in January. As we can see, at the end of the month, we only had 4,265 total homes with 1,004 going under contract. So that's just over a 4-month supply. Now, I do know, and we don't have the numbers quite yet here, I'll have them for you soon, but the February, the active listings did jump back up to 5,000. A lot of homes are going on the market. But the good news is a lot of them are selling, and the good homes are selling pretty quick and for close to asking. If you look at the average sales price to list price in the most popular price ranges, which is going to be between 100 and 400, or even if you look up to the 500, we're getting close between 97 to 99% of list price to sales price. That's super exciting. So just to kind of get a better idea of what's going on, I know my experience is good to kind of take a look and see where we've been. So the next slide, we're actually going to go back and we're going to see what's happened and then also take a look at what the experts are predicting. So taking a look here, this graph, it actually shows you the annual appreciation between a couple different sets of years. The first year starting from 1987 to 1999. We can see that the average home price on a yearly basis appreciated 3.6% each year. That's pretty normal, 3% a year. But then we take a look during the bubble, during the crazy times, between 2000 and 2006, prices appreciated on average each year 10.4%. Wow, so that means the normal appreciation more than tripled. And as we all know, it went up too fast, too high, just too quickly, and there had to be an adjustment to that anomaly. So what happened between 2006 and 2012, the annual depreciation was 5.7%, and that was over each year. So that's pretty rough. But looking at what's going to happen from now, 2013, over the next 3 or 4 years, the Home Expectation Price Survey says that over the next 4 years, it projects that we're going to be back to a normal 3.3 appreciation. And this is a survey done quarterly. It takes over 100 of the nation's most prestige expert on real estate, and it averages all of their opinions. Some are really high, some are really low. But when we look, it usually ends up being pretty accurate. And if we take this next slide, take a look at what they're saying over the next couple years. Each year it's going to be about 3.3%, which is definitely a lot better than what we've seen over the last 6 years. So if we take a look at this next slide, this is what shows how market supply affects pricing. So right now, if we go back and we look and we saw in January we had just over a 4-month supply. We're probably right around 5 months now. And looking at this slide, it shows that a normal market is about a 4 to 5 month supply of homes. Anytime that we're between a 1 and 4 month supply, it's a seller's market. We're going to see appreciation. Anytime we're over a 7-month supply, That's when we go back into a buyer's market and where homes prices will depreciate again. So if we take a look and we see what's happened, we can see that the month of supply nationally has actually steadily been going down over the last 6 months as the market's been getting better. And on a national level, we're getting really close to being back to a seller's market. But please know that anyone listening that markets are going to be different from town to town. So please check with your local expert. But right now here in Richmond, we're about a 5-month supply. So we're hovering right above that appreciation mark, which is definitely really nice. I know something that we've all been missing for years now. So what this next slide here shows, it's kind of the old adage, sell high, buy low. And we can kind of see over the last 13 years where the real estate market has gone up and down. And we can see right now that we're starting to go back up on the upswing. We went through the high, we're down through the low, and now it's time for us to start going back up. We're just past the bottom where the slide shows the maximum point of opportunity. And with interest rates still being under 4%, that says there's a lot of opportunity for buyers and sellers. This is just simply amazing right now. So if we look here, if you've ever dreamt of moving up and you might have regretted not selling at the height of the market in 2006, don't worry, because you actually made a really good decision. So let's take a look at this house. Let's say that you were currently in a house that cost $300,000 back in 2006. You would like to move into that house that cost $400,000. You didn't, and you've stayed in your house. And over the last 6 years, we've actually had about on average a 25% decrease in values. So that means your $300,000 house is worth about $225,000. At the same time, that $400,000 house is only worth $300,000 now. So where your home may have lost $75,000 in value, the home you wanted to move into lost $100,000. So that actually shows a net gain for you of $25,000 just purely in home value. And then if we take a look at the interest rates back in 2006, if you would have moved then, you would have had about a 6.5% rate. And on that $400,000 house, that would have put just a principal and interest, not including taxes or insurance, a payment of $2,528.27. Now today, that $400,000 house is only worth $300,000, and with 3.5% interest rate, you can actually get in with almost half the payment, $1,347.13, which is a total saving for you every single month. $1,181.14 for that same house. Add that up over 12 months, that's over $14,000. And then add that up over the life of the loan, 30 years, that's $425,000 you saved by waiting to move up from 2006 to today. So there's a tremendous opportunity for people who are looking to move into that bigger home. But as we all know, as the economy and the real estate market starts to do better, real estate interest rates, they're going to start creeping back up. And the Mortgage Broker Association recently predicted by the end of the year, rates will hit 4.2%. And if we look, they've already started to inch upwards. This slide shows the change between December and March of this year. And we can see rates are already starting to go up. They're not going up super fast, but they definitely are going up. And as the market continues to improve, they're only going to go up more. The government has been keeping rates artificially low to spur the economy. And now that the economy is doing better, they're going to let rates go back up slowly but surely. So I do hope all this information has been helpful for you in making any important decision in regards to what to do with real estate and moving. If you have any questions at all about this or anything real estate related, please know that I'm here to help. You can call me, Alex Glaser with Coldwell Banker, anytime at 804-396-3196. Again, that's 396-3196. You can call, text, or email me at alex@alexsellsrichmond.com. And yeah, hope you have a great day. Thank you so much for watching, and I'll talk to you next month.